Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Apple report for Thursday, January 18th, 2024.
But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever.
Let's jump into the charts. I'll start with the big picture, work our way into the day. Just a reminder that this is long-term support, 163.72 to 165.14, that we settled above in May, retested several months ago, came off of it nicely. Still bottom picking territory longer term, and above which new all-time highs are expected over the coming weeks/months. And I'll get to that upside in a moment. I will also mention, as I often do, that we also settled a couple of months ago above the 179.42 descending channel top, which we have tested over the last few weeks and almost retested actually on Wednesday of this week. In fact, I'm going to jump to the daily chart right now and show the same descending channel top is at 178.70 today, 179.42 all week long. We almost retested the low from a couple of weeks ago, did not. And the fact that we didn't means that this descending 2/3 speed line is still intact, still relevant, still valid as a near-term resistance area that I think is still in reach over the next week or two. Can contain weekly buying pressures, and from there we can fall back into the upper 170s again within a week or two of testing 189.03. But honestly, as I've also been saying, holding above 179.42 maintains a bullish dynamic that I think is likely to play out through the rest of the first quarter into the second quarter. 203.20, a simple trend line off of these highs, but what I point to as I think what is a possible 2 to 3 month target now, holding above 179.42, is nothing more than this channel top at 205.47, based in part on yesterday's low. And if we begin to pull away from here, this will remain a valid line study, a valid channel resistance that I consider to be in reach over the next 2 to 3 months above 179.42 long-term support. So, in terms of trading this, the 178.70 to 179.42 is a solid zone of support to buy into for day traders, 3 to 5 day swing traders, 3 to 5 week swing traders, and 3 to 5 month near-term investors, because holding above the upper 170s, as I just said, 205.47 remains a 2 to 3 month target. And if over the next week or two we happen to settle above 189.03, and it is considered an eventuality, holding above the upper 170s, closing above 189.03, 2 to 3 week rally back to 199.62. That is the all-time high placed in December. And over the following month or two, the 205.47. So 1 to 2 month target above 189.03 still remains a 2 to 3 month objective above 179.42. And that's about as simple as I can make it for the kind of the big picture. Let's take a look at the day itself. 183.68 is a 50% upside retracement from the high of last week against the low that was put out yesterday, that is Wednesday. And what I like about 183.68 is that I do think that if we push through it, we will close that gap. There's a very good chance we will close the gap. Now, whether we rally all the way up to 187.12 is another question altogether, but I will frame it this way, that if we settle today above 183.68, I do think we have a good low for the week, and we should, well, that's not saying much. I guess this is Thursday. We should then, within 1 to 2 days, push into that 187.12 to 189.03 region. As this area comes together, and it will over the next next few days, it will be considered a range. A 3-star resistance 187.12 and 189.03, able to absorb once again, buying on a weekly basis through next week, and from there we can fall back into the upper 170s within a week or two of doing so. So if you're a 1 to 2 week swing trader, you're buying the upper 170s, you're selling the upper 180s. If you're a 3 to 5 week or a 2 to 3 month swing trader or investor, you're buying the upper 170s on weakness and holding out for either 199.62 or 205.47 over the next several months. Closing above 189.03 should accelerate that rally as we move into February trade. Downside, I will just reemphasize that if we do close today below 178.70, we should tomorrow test 175.57. And then the big question will be, do we settle the week itself Friday, tomorrow, below 179.42? And if we do, I think then we are, the market is indicating 3 to 5 weeks bearish continuation back to this long-term support area in the 163.72 to 165.14 region, where once again we can bottom out through all of 24 and round back up again. Ultimately, I do still think this 235.52 area is in reach by the end of the year. And the last thing I will say, I'll jump back to this chart and just say that if over the next few months, 3 to 5 months, we close above this 205.47 formation, you can't really see it well in terms of the two, but if we do close above the 205.47 formation, and that is about right here right now, that is just a channel like this. If we close above that, accelerated bullish continuation within several months to 235.52. It's about as simple as that. I'm going to leave you with this chart for the day, the most appropriate for the day itself. All the minor points have been carefully chosen. They're all very tradable for aggressive day traders. It's just that 183.68 is sort of your pivot point for the day, below which we could ease back into the upper 170s today. And if we close above 183.68, we should rally into the upper 180s within a day or two at the most. I'm going to leave it at that. Please click like, share, subscribe. Check out wickedstocks.com. We put out 2 stock picks on Wednesday, one on AMD that you'll want to see because it's a very actively traded stock, and the other on Live Entertainment, LYV. That is a ticket sales, a promotional international company, large cap stock. How do I say that? That is showing potential right now. This is much of a teaser as I'm going to make, and you can see it all for free. If you sign up for wickedstocks.com, we offer a 5-day free trial, and if you don't like what you see, you can bail out within 5 days at no cost to you whatsoever, but I suspect you will likely stick around because you will like what you see. Daily Triple Q, Daily Spy, so forth and so on. That is all I've got for Thursday's Apple Report. I'll leave it at that. Talk to you tomorrow for Friday's Apple.